What
Let's do
is
it.
up, everyone? This is the Matt Kreiser Show, and today I am so excited to have on Yael Tamar. She is the co-CEO, co-founder of SolidBlock. They are bringing real estate to the blockchain to make ownership of real estate more democratic, open, transparent. Yael, how's it going?
Amazing. Thanks for having me, Matt. How you doing?
I'm doing well. I'm excited. This is such an important topic for my generation. I was just talking about last week how, home prices, they've gotten so expensive for people compared to their salaries. If you're making, 60,000 US dollars, I live in California, and if I want to buy a home, it's a basic home, maybe $1 million, not something that's your dream home, your beach house, just something that you can raise your family in. So I'm excited that you're doing this, opening up the ownership of real estate, making it more democratic, because it's just something that's so important for people.
Absolutely. And also we got to cover a very, very basic question. Why do you need to own real estate? Is it for having a place to live? Is it for having a place, having a great and stable investment? Is it for something you can leverage to get a loan, right? There are different reasons why anybody should or shouldn't own real estate. So that's something else I would love to talk about. And I know, I read a lot about it, about the stats of different generational ownership, right? So what is your generation's outlook on owning a place versus your parents or your my generation? And, we probably have like a half a generation between us. And then, our parents and our grandparents, right? Like how ownership keeps going down, percentage of people who own a home.
Absolutely. And so let's get into it. I mean, people have kind of heard of fractionalized real estate. They've heard like, oh, maybe I'll never get to own my own home, but I could go, put a few $1,000s into this high-rise development in New York City or something like that. But Solid Block, it's taking it to a whole nother level. It's bringing the technology of crypto and doing fractionalized real estate to a whole nother level. Can you talk about that?
Yeah, that's exactly what we're doing, Matt. You put it really eloquently. Our vision is to enable anybody to own a piece of real estate, to level the playing field, right? You kind of have the wealthy, the extremely wealthy, right? The top 1%. And I guarantee you that they have a lot of real estate. This is the most basic asset class you can have to start building wealth. Why is it so basic? Because once you have real estate that's recognized by financial institutions, that will then enable you to take a loan and start building your own business or start investing in different things, right? Which, of course, definitely involves all kinds of financial education that you need to have. So it kind of is this differentiating force between people who are just working really hard. You see, all working class working really hard towards something and not being able to get to a certain level. And I think that that's because they don't own several basic these basic assets like real estate. So we want to change that game, right? We want to enable anybody to have a piece of real estate, and that piece of real estate is basically investment. It's passive investment. We can have assets of different kinds in different countries that you can buy at a low amount and you can sell at any time, right? Because people who don't have that many resources cannot afford having their money stuck in one project for many years.
So let's talk about one of those investments. It was the Aspen Hotel, the St. Regis Aspen Hotel,
Right.
five-star hotel in Aspen, Colorado. When people think about owning their slice of the American dream, that's a very high-end
Right.
slice, but you can scale it. I mean, what was the minimum investment you were accepting in that property?
So that was $10,000, right? So that investment specifically was open to sophisticated or accredited investors at that stage in time, just because it was easier. The regulation for accredited investors is easier to facilitate. So that was, let me just tell you how tokenization works and when different people can access different investments. So in general, there are two types of financing possibilities for any asset, whether that's a company or a real estate asset. You can go public, bigger companies, bigger assets go public, and then anybody can buy a piece of asset on a stock exchange, right? So that's one way to raise money. Another way is a private placement, and a private placement is actually where the majority of the people, rich people, make their money because they get in on assets early. And that's what happened in St. Regis. St. Regis is, like you said, a very famous landmark type of an asset. Everybody knows it. People, obviously, people who ski, they go to ski resort, they know St. Regis for sure. Most people in their 50s, 60s, once in a lifetime, they visit it. So when they heard about this project, everybody wanted in on it, especially if you can just put $10,000 in a stable asset, they wanted in on it. So that was a very attractive, it was an attractive way. So
but
private
not everyone could
placements,
get in on it. And I just want to touch on this real quick is that for everyone listening, we're talking about democratizing this, giving access. But Yael's company, it has to deal with regulations. This is not just like coding. You can't just come up with your own new algorithms and things. There are rules in place. There are things that are preventing the innovation, even if the technology is there for Yael and SolidBlock. So even if technically they could offer this hotel to anyone, they weren't allowed because of accreditation and SEC regulations.
Right. So you can take one step further to allow retail level investors. Retail is everybody, right? Let's also talk about the differences between retail and accredited, and also why the SEC, Securities and Exchange Commission, is not allowing everybody, let's say, to go in on every type of investment. I think it's important to differentiate. So very quickly, the accredited investors anybody who either owns $1 million in property value over their primary residence, or I believe it's $250,000 in annual income for a person, $300,000 for a family. So it's not extraordinarily high, but it's a good level that kind of, for the government, it was a good way to differentiate between somebody who might be educated about different financial products and somebody who might be gambling. That just was a way for them to do this. Now this has changed. Yeah. It was because this is finally changing, and I love it because that shouldn't be the way you differentiate between somebody who knows what they're doing and somebody who doesn't know what they're doing. Because, like, for example, myself, I worked in capital markets since the age of 18. I had a job on Wall Street, and then I kept doing M&A and private equity in Israel when I moved to Israel, financial engineering, investing on behalf of other people. And then for myself, I was an entrepreneur all my life. I put all my money in my businesses. I didn't have a lot of money in my bank account to show the government. And so I'm not considered to be an accredited investor, but I know what I'm investing in and the risks associated with it. Right. So now the rules are changing, and there are signals that the SEC soon will allow people who are educated financially, and they can prove so by possibly taking a test, right, to be able to invest as an accredited or sophisticated investor.
That's fantastic. Now back to the hotel. You were saying that in Colorado, this sold out. Everyone wanted a piece of it, and they sort of had a type of early access.
Yeah, exactly. So why was it only available to accredited investors? Well, in America, there was something that's called the Jobs Act in 2012. The Obama administration gave small and medium enterprises all kinds of boosts, right? So they wanted to pass legislation that let companies develop faster, and one of those was enabling private placements to be marketed to at least accredited investors freely. You don't have to think about, who you're marketing to. You don't have to be super careful. You can go out and take out an article in Times Square, as long as before somebody invests, you check that they have a certain level of income. So that was one thing that was done. And actually, the person who was responsible for this is called the father of the Jobs Act, David Wild. I had him on a podcast a few weeks ago. So he's Amazing. A really, really cool guy. He was the vice chairman of NASDAQ at the time. So That was one thing that Jobs Act allowed. The other thing is that it allowed trading of private placements. You don't have to go public anymore to be able to enable trading, which is also revolutionary because people like us, who want to buy a piece of real estate, don't necessarily have huge amounts of money to invest, can trade, can go in and out, of assets, right? And trade peer to peer. That was a very, very serendipitous, I guess, because blockchain came out almost at the same time.
Right.
So blockchain came out when, Bitcoin came out in 2010. And then in around 2012, people realized, wow, we can use blockchain for other things than just supporting crypto. And we can wrap other assets in crypto-like structures, which is what we're doing in SolidBlock, taking real estate, wrapping it around in a crypto, which creates a financial product, which you can now buy and sell.
So how would you frame it? Are you bringing real estate to crypto, or is crypto going to real estate?
Well, actually, to be exact, that's blockchain. We can accept crypto. We can accept any currency and any fiat or crypto, but we are using blockchain to make real estate tradable.
Got it. So you're using the technology that underlines crypto, which is blockchain. I guess the reason I said crypto, and this is something I really want to talk to you about, is we see these business models. I went on the SolidBlock website. You're offering a lot of value to maybe the developers, to the people who own this asset, to tokenize it. But if we take a step back and we look at the ethos of crypto and the ethos of blockchain, it really is originally sort of, you could say, C2C, consumer to consumer, whereas a lot of these models for tokenization still seem to be B2B. Is there a path forward where you're seeing these business models, they're not just going to realize the technology of the blockchain, but also more of the ethos and philosophy behind crypto as a movement?
100%. And this is what tokenization really is all about, is to enable individuals to gain financial freedom. And that's the ethos of crypto, right? Is to be your own bank. Be your own bank. Imagine how the world changed with the invention of a bank where you could go and put your money, especially a digital banking, right? You can go and put your money in your bank and then have all kinds of services available to you, like loans, like, mortgages, credit cards, investing, all of that, right? Now imagine you can deposit your real estate, right? Let's say you have an apartment that you bought or a big building that you built. There is no difference. You deposit that into this digital investment bank that will, as a return, provide you with all kinds of services associated with now this digital estate you own. Now, if you don't own an apartment, no problem. You have extra $20,000, buy a piece of real estate. And again, you're going to have all these services now because you have an asset.
Yeah, and I'm curious, do the unique benefits of real estate pass through to you when you do this? Do you realize the tax benefits, the depreciation, bonus depreciation, things like that?
That is a fantastic question. So in general, yes, it depends on the structure. It depends on different countries that you work through. As an investor, especially as a passive investor, there are different reasons why you invest in real estate. One of that would be depreciation. That's very, very important to American investors, is to have all kinds of tax benefits. There might be a little change in the model where the tax benefits are passed on the top company, Topco, and then you're getting, as a result, much higher returns. Let's say, if you buy right now some sort of an apartment or invest in a project, and you'll be getting 3%, 4%, 5% yield maximum. And then you also get, let's say, the depreciation pass through, as opposed to, let's say, investing in a project and getting an 8, 9, 10% yield and not getting the depreciation pass through. There are models like that. But I believe that with tokenization, and we still have to explore, we're still exploring different tax structures, depending on the projects, depending on it's very, very complex. Real estate and coupled with security is very complex. I believe that we can find a way to actually create this pass-through opportunity for securities as well.
Got it. That's really fascinating. And then another thing that's really important about this, and I'm curious for SolidBlock, is are these deals financed 100% equity, and then people are sizing the amount of debt they want to take out on their own tokens?
So actually, right now, these types of models are in the making, the debt. But let's just talk about for a minute the options of investing. You
Okay.
can invest in equity. This is one of the models. It usually works well for development projects. And why would you invest? Because you're expecting, when the asset is built, it's going to be sold, and you're going to get a part of the upside. That's why you
Okay.
want to
So let's
invest
talk
in
about one of
equity.
your favorite developments you've done through
Yeah.
SolidBlock as an example.
Yeah. Okay, great. So St. Regis is one. That was an equity project, and it was actually the textbook project. There are 22 people, 22 not people, entities that invested in on the primary level. Some of them were individuals, some of them were funds. Some of them were syndicated. So these 22 investors that ranged from $10,000 all the way to $2 million, they invested in October 2018. The project was listed on T0 Exchange a year and a half later, and it was immediately selling at a 30% premium.
Wow.
And investors actually, so investors were promised around 4.7% return annual dividends. And actually 2019 was a really good year. So they got 6% return. Right.
Mm-hmm.
So if you look at that year and a half, and if anybody sold their asset on T0 a year and a half later, first of all, they got a 30% premium. And on top of that, they got around 10% in dividends. So they got a 40% return for, a year and a half. So of
And
holding an asset. Yeah.
and they were realizing the tax benefits on this one, or they were not?
I don't believe so, right? So they probably paid capital gains from, if they sold their asset, it's a security. So they probably got capital gains on top of it. It's a passive investment and it's a REIT. So I'm not sure what kind of depreciation there would be after a year and a half. I don't think that there would be much
Mm-hmm.
anyway. But they got a really good return, right? If you put in $10,000, $10,000 at the start, you would see around 13 plus another, you would see 14, $15,000, right? You would see that when you sold, right?
Yep.
So then if you got that extra $4 or $5,000, that's not bad for a year and a half. And you might have to pay, I don't know what capital gains tax, 10 or 15% off of
Mm-hmm.
that. And it's pretty nice. You pocketed extra $3,500. Not bad, I would say.
Absolutely. So I wanted to get back real quick on the debt sizing. So for a deal like this, just say this again,
Yeah,
where I put $20,000 in. Am I
yeah,
able to say, hey, can I take an over collateralized loan on this position?
yeah. Well, there are actually DeFi sources right now. Companies like MakerDAO, which are allowing these sort of things, and there are others that are coming out. We're building something with SolidBlock where we'll be able to partner with different companies that offer loans. Based on collateralized security tokens. So as of today, I don't think there is much available to you. But I think in about 6 months, there will be around 6, 7 companies that offer this, or maybe more.
That's
So
exciting because that's the ethos
yeah,
that you said of
yeah,
being your own bank.
exactly. So there's also another debt component to it, which maybe we should mention. Just the real estate model itself. One is equity and the other one is debt. So we have several products which are structured as debt to start with. For example, we have now London Digital Bonds, which is a company that invests in single family residential real estate in London that's undervalued and then flips it and sells it, at a premium, which allows to get around 60-70% profitability on each asset. So we're able to distribute 10 to 15% annually to investors, as
Wow.
opposed to, so that's a really interesting model by itself. It's a bond, it's a 5-year bond. So you'll see a lot of these. Why you will see a lot of these right now? Because there's a lot of commercial real estate. A lot of people right now, because it's an uncertain time, are looking for yielding real estate. So kind of like commercial triple net leases. Triple net lease is basically a lease to like a Fortune 500, Fortune 200 company, like a big company that's not able to renege on its obligations. Just basically, it's a guaranteed lease for 5 to 10 years. And, you see a lot of these assets available right now. And actually, because real estate went down in price, you see pretty high yields because the yield is calculated, by dividing by the price of the asset. So the price of the asset drops, then the yields all of a sudden go higher. So, you see these 7, 8, 9, 10% yields on super stable assets. So that's something that that I think people didn't realize they can get. You can compare this now to like S&P 500, which is risky, right? And you can get the same with real estate, which is much more stable.
Absolutely. Now, yeah, I'm curious about your career. You were very dynamic, very successful. What drew you and made you passionate about blockchain, made you passionate about crypto, made you kind of underlyingly align with that ethos of being your own bank? Because you didn't have to do that. You worked on Wall Street. You've been dynamic. You've been successful. You took care of yourself. Why'd you take this path?
Well, I am an entrepreneur at the core. I always am looking for trends as they start. Sometimes I get on the trend and it kind of doesn't materialize, and you've seen those things quite a bit. And sometimes you get on the trend when you're too early as an
Like what?
entrepreneur, and it's a bummer. I'll give you some examples. So my first startup was in 2010. So first of all, Israel is dubbed as a startup nation. And if anybody here is not familiar, there is a book that's called The Startup Nation, and just kind of explains why, how the government created like this drive for people and entrepreneurs here, cultivating this culture. And so I got here in 2005, and I worked here, at like big, small and big M&A firms, selling different companies and so on. And then at a certain point, I got to a meetup somehow with all these entrepreneurs, around me. It was a breakfast actually with my friend Jeff Pulver. I think I started going to these meetups, and I realized like, wow, this is amazing. You can have, you can work on something and get rich, that's one thing. And you can also create something that billions of people can use, right? So that was cool. And so in 2010 or 2011, I had my first startup, Tap Tank. I did it with my friend Alicia Outridge, my college buddy. And we created kind of this social app that had the attributes of what came out later, a few months later, as like a Facebook social graph. And if you remember that thing, that it was very early Facebook, like 2010, 2011. So and
That's when
that was a
Facebook was
failure.
fun. Yeah, that's when it was fun.
That's when it was fun, and it actually didn't seem to go anywhere. It kind of disappeared. That feature disappeared because I think it was basically kind of used in ads, and there's not you're not allowed to kind of look up people based on their interests anymore. And you could back in 2011, and that's what we were building. We were trying to connect people based on their interests and trying to understand automatically what their interests are. This is basically the basis now of Facebook ads algorithm, right? They
Right.
know you like tennis, they're gonna sell you tennis rackets,
I
right?
do like
So
tennis. You're scaring me, yo. How'd you know that?
I
I'm
didn't,
just
but I actually drove by the tennis courts today, and I told my kid, who's 8 years old, and I'm trying to get her into all kinds of sports, and we were driving from the ninja course or whatever. It's like, look, you're good at this, so you should play tennis, because tennis has three things. One is strong arms, quick movement, and also coordination. Right, so like we'll see if I get her into tennis.
I hope so. It's an amazing sport. The weather's been good here in California, so I've been enjoying it. Um, yeah, I mean, I agree with that. I mean, when I just remember Facebook back in the good old days. It was so fun. People didn't, everything now is PR, right? I mean, Facebook's so
Yeah,
commercialized like
absolutely.
LinkedIn.
Yeah.
So I don't know.
So yeah, yeah. Sorry, go ahead.
Oh, I was just gonna say, I remember a few months ago, I was looking back with my high school friends, and we're like, we can't believe we posted these things. But that's when you enjoyed Facebook.
I know, right? So yeah, I was saying, giving us a few examples. This was an example of us going after something that, a big company invented. And that happens a lot. And that's a big, when you're going into the B2C apps, that's a big kind of risk that some big company will come and do this.
Yeah, it's so
Mhm.
interesting. I mean, it's an interesting time. I was talking to some people in real estate who are big developers about tokenization. And,
Mhm.
they almost were saying back to me, well, this is just another broker dealer. And,
Yeah.
uh, what's the thing here? And really, when I put myself in their shoes, I understood it because the truth is, like, there's the technology benefits, and then there's the fact that we're living in a time where these guys, all their deals are oversubscribed. The
Yeah.
returns are really good, and they're focused on what is the quality of this investment. So I think there's, coming back and we talk about natively digital assets. A lot of people are like, get off zero, just be exposed to crypto. But I don't think that's it, because you want to be exposed to good projects. And then it's the same thing with
Exactly.
real estate. It's not just that you want to have exposure to real estate or exposure to tokenized real estate. The fundamental thing is you want to be exposed to good quality projects
To a variety
that are
as well,
underwritten
like a
well. And so I
portfolio.
understood these guys' perspective, why they haven't adopted the technology yet, especially when everything's oversubscribed right now, in terms of the LPs trying to get into these deals.
Yeah.
But at the same time, that doesn't mean that this isn't amazing technology, and at some point the crescendo is going to happen and this is just going to explode.
Yeah, for sure. So, like I was saying, there's different, sometimes you're right on time. So I think we're right on time. And you wanted some examples of things where we would come out and things didn't pan out. I had an app at some point that we developed for Google Glass, right? So it was kind of like a video app, what you see with Snapchat. It was exactly that, but for Google Glass, for example, right? So that didn't work, as you know. Yeah, I don't know if you even remember what Google Glass
I
was.
remember it. I just remember
You
that it looked
remember?
funny. It sounded cool,
Yeah.
but I don't think I ever even tried it.
Yeah, so that was one example. So now I think we're at the right time with SolidBlock. Why? Because people are looking for liquidity. They're looking for ways to invest. And you see what happened with Robinhood and how, a lot of people realized, well, this is the time to diversify. We shouldn't let just the big hedge funds make all the money. We can make the money. And I want to go back for a second to the fact that you can actually make these private placements available to retail investors as well. And we're doing that with London digital bonds. How we're doing that? In order to sell something to retail, meaning non-accredited investors, you need to have a crowdfunding license or work through a crowdfunding platform. So we're putting London digital bonds on Republic, on the Republic website, which is a famous crowdfunding
Love
website.
Republic.
Yeah.
I got in. Did you get in on Gumroad this week?
I didn't because but I've seen a lot of really good deals. Yeah, I've
Right.
seen a lot of good deals. Yeah, for sure.
And so, sorry, keep going with that on how you're on Republic and you're offering this.
Yeah, for sure. No, I mean that's it. This is the first deal first tokenized deal where it's available to anybody, right? Anybody, anywhere in the world can get on the deal, and then after they invest, they're going to get the username and password, and they're going to be able to sell, to SolidBlock, and they're going to be able to sell their holdings whenever they want, right? Pending, of course, some lockup periods. There will be a 1 year lockup in the United for any U.S. investors. There will be a 1 year lockup. After the lockup, they'll be able to sell it at any time, realize profits, and so on.
And is there going to be liquidity there? Because we've talked about that this tokenization, it creates liquidity, but there has to be a buyer and a seller there.
Yeah, absolutely. Well, we're looking at exchanges to create that liquidity. That's one way. We can do everything at SolidBlock, so we're providing a tool to make real estate digital, right? That's one thing. And the second, we're providing a marketplace connecting projects with investors. And it's a global marketplace, and it's also a multifaceted marketplace. It's not only on SolidBlock website, because you see there's also projects on Republic, on other ATSs, and so on. right? So they're distributing our products. Now, somebody's got to create liquidity on the secondary market. And that somebody is number one, exchanges, number two, market makers. Now, these exchanges, by the way, are these ATSs, automated trading systems, that have a license to trade digital securities. By the way, Binance, one of the largest exchanges in the world, has license to do that. It hasn't started trading securities, but there's speculation that they will soon. And traditional exchanges already have different portals and licenses to do that as well.
Right. I mean, it seems like a no-brainer that once this is tokenized, there's going to be someone who will provide that liquidity. And it's the same thing that we saw in DeFi with the evolution of liquidation bots. Like,
Yeah.
there's naturally an incentive for this to be there, and someone will fill that need, even if we haven't seen it come to fruition yet.
Yeah. Absolutely. Well, there's going to be, well, the Aspen coin, for example, is trading really well. They're pretty good. Market, like 5 to 10% of the market cap is traded every month. Every time there's a post to sell, you see it being fulfilled within a relatively short period of time. So, there are no problems with liquidity right now for a few projects that are there. And I think that once we have a great project, more great projects online, people are going to buy them.
I love that. Now, I'm curious, you've been in the nitty-gritty of this space. Have you seen any models that are sort of rent-to-own models that make use of tokenization, whereby the people who, it could even be an institutional asset, where the renters are able to realize LP equity?
That's a great question. In fact, that's something we're building right now for affordable and workforce housing, where, remember I was saying that we need to dismantle the boundaries, and the ceiling that many people have to owning property, and enable these people to build wealth. So we're working right now with several developers to create a model for affordable and workforce housing, where renters will be able to buy. And it's not a traditional rent to own, because in a traditional rent to own, you still have a high threshold. It's kind of still like a mortgage, still high yield, and you're not owning your place. In our scenario, ideally, I would like people to flexibly invest as much as they can whenever they can. And then their rent would be reduced accordingly, right? Because they don't have to invest in their own apartment, by the way. They can invest in the whole building, in the whole project. And that makes it, I think, more attractive. But by the way, people care about the asset much more. You can also introduce utility token for commercial, a different type of token that for payment in different commercial, let's say, a store, a laundromat, or whatever services, utility services that you introduce in the building. It's actually, you can create a self-contained model, and it's really exciting. We're working on that right now.
And you're aligning so many interests when you do that. I like that. I'm curious on that model. Would it be something like, 1 month they can just pay their rent, the next month they have some more money and they can just dump that and immediately realize equity in the underlying, apartment complex?
Exactly. That's the plan, Matt. That exactly is the plan.
And is that possible in the United States? What jurisdictions are you working on this in?
Oh, of course. Absolutely. This is possible anywhere. We're in SolidBlock. We are the experts of creating compliant offerings. So the way you would do this is, there's two ways to do this. In the US, you have, in the primary level, we could use regulation called Reg A Plus, which allows you to raise up to $75 million from retail level investors. It takes a long time and it's very expensive. You need quite a bit of money and patience to get that done. So what we could actually do in the beginning is to have more wealthy members of the community, accredited investors, to fund the project on the primary level. And then it can go into the secondary market, and then retail investors in most states in the United States can invest. And so we can have them invest, in a secondary market. Basically, we can put these tokens on the secondary market and where they can buy them.
That's amazing. So in theory, you have the wealthy investors doing the development of the
Yeah,
affordable or workforce housing, and then the
exactly.
renters are able to, on the
Yeah.
back end, realize equity in that development.
Exactly. And we view it as, give back to your community, even, especially when you talk about minority communities, right? So African American community, for example, where we're working with quite a few developers in the minority space as well, and a few partners. So we can, like Percept Forum, for example, Christopher Perceptions. So, we're looking for these community members to come and step up and help others to, get on their feet and gain financial freedom.
So technically, I'm curious how that worked. Would it be like, hey, this renter, and it could be literally a wallet address or whatever. I don't know
Mhm.
how the SolidBlock system or the system more closed systems you work with are, but would it just be like, hey, this verified KYC address has a little bit of extra money, and they want to swap equity with this person who helped develop the property, this wealthier person, to realize
Yeah.
equity, and then there's just an agreed upon price. I mean, it's so different than traditional real estate development where you hold for
No,
a
it
longer
would
period.
be it would be a little easier actually. We're mimicking traditional systems. So what it would be is, we'll put together a private placement, an announcement that we're building an affordable housing or workforce housing asset, and we need $5 million or $10 million to buy it or to develop it, and then we'll invite members of the community to invest on the primary level. So let's say that they invested and we bought the asset or developed the asset. We wouldn't do it ourselves, obviously. At SolidBlock, we'd have some real estate partners that are working on the ground.
Right.
So and then a year later, and by the way, you can shorten it in some instances to 3 months. This lockup period. So, but let's suppose a year later, the asset is ready to go. We either renovated it or populated it with residents. The residents are moving into their apartments and they're living in that apartment. They're offered a contract. Let's say they pay rent. Let's say they pay $2,000 a month in rent,
Mm-hmm.
and so they're offered a contract where every month they can contribute $500 towards towards owning that apartment. Let's say that apartment maybe costs $500,000 so to buy, and so you can contribute $500, $1,000, $2,000, as much as you have, and so if you contributed $2,000, maybe you don't pay rent. Obviously, we have to create a like tokenization, or I would say tokenomics model to make this work for everybody. But if you contribute a certain amount, then you don't have to pay rent. You contributed less, then the money goes towards rent. So that's how we would build this.
Got it. And so I guess is that flexible too, or would it be fixed? Because you talked about wanting it to be more flexible than that.
Oh yeah, we can definitely make it flexible because it doesn't matter at the end of the day. The landlord has to get their money, right? They has to get their money in rent. Let's say a certain amount. Maybe they have 100 tenants, each paying $2,000. Then you'll have 2,000 times 100. In terms of rental income that they're getting, right? So at the same time, if the landowner is selling a part of their asset to the residents, right? So then they hold less, right? So then the residents kind of don't have to pay rent to themselves. So if you contribute, if at the end of the day, after 5 years, you may actually own the whole place, right? Depending on how
Right.
much money you're putting in. So we could create a flexible, pay as you go, or we can create something more fixed depending on what the person is looking for, right? And it could be a monthly payment from their credit card.
And is this, you said apartments or condos? Because would there be like a conversion to condos, or because would they actually be realizing in that specific apartment, or would
Yeah,
they be realizing in the institutional asset just a percentage of equity?
we could do either, but with condos, it's going to be more expensive because these are
Yeah.
smaller assets, and also liquidity is going to be limited. So it really depends. Like we have to still research the space and how willing these people would be to, let's say, we could actually create a hybrid model with NFTs. I was thinking about that lately. I don't know, non-fungible tokens. I don't know how much you want to dig into this, but we could technically allocate security in this whole project, but then actually give these people ownership of a specific apartment. We're
That's
gonna see
interesting in the sense that the
what happens.
NFTs would represent the difference in value of different apartments based on, light, window, location, position, because that
Yeah.
would be a social problem, is that not every, these institutional assets are sold, whatever, 400,000 per unit.
Yeah.
But really, if you're, splitting this into a condo complex after
Mm-hmm.
it was an institutional asset, they're not all worth the same when they're appraised as
Right.
condos.
Right.
So
Exactly.
NFTs would
Exactly.
solve that.
Yeah, it seems like it, right? So even though I am an economist by nature, I have an MA and unfinished PhD in economics. I don't feel like I'm fit to attempt to create this economic model. There are many more people
Right.
that are smarter than me. So, and we're
Fair enough.
looking for them, by the way. If somebody here is like super I don't know, well versed in economic modeling and crypto as well, I'd love to hear from you and help us create these models.
Yeah, me too. We'll leave our speculation there, and my expert listener will reach out to you. So I guess, what exactly does SolidBlock do, and how does it make its money?
So what we do is, number one, we have a platform that converts real estate into a financial product. So it includes compliance. So we create compliance structures. It includes the technical part, which is a smart contract. A smart contract is a blockchain program that connects individuals to their assets. So instead of your ownership being recorded in some database in Excel or maybe in some lawyer's office, we record it on the blockchain, which is immutable. In our case, on ERC20, it's also public, obviously anonymized, but public. And you're able to trade because of that. Because it is on the blockchain, you're able to trade over the counter, meaning if you want to sell it to your neighbor, you can just have your neighbor log into SolidBlock, sign up for SolidBlock platform, and go through KYC, know your customer, anti-money laundering accreditation if needed, and then buy the asset from you. So that's a way you can sell it to anybody, right? And the second way is, of course, to sell it on the exchange, where you can sell it to somebody you don't know, right? And you don't have to get them to sign up to our platform. They just have to be signed up on one of the exchanges. So that's one thing of what we do. And the other thing is the marketplace. So we have assets that we place on the marketplace where, asset owners can obviously go through due diligence, and we digitize their assets. They go on the marketplace and the users can discover them there.
So I'm curious, if you're talking to me and I'm, a really successful real estate developer, and I say, well, all that technology is great, but my deals are oversubscribed and things work well now. I'm curious how you would explain the value proposition to them, and what utility you'd say that would push them over the edge there.
Right. So number one, you can leverage your existing assets. Let's say you have an asset sitting there. Let's say you have a shopping mall that's doing really well. $100 million in equity that you're holding. Let's say $100 million in mortgage. In total, 200 million. That 100 is just sitting there. Why don't you sell a part of that to investors, get some extra cash? And now, by the way, cash is king because everything's super cheap out there, right? There's like blood is in the streets. So you want to invest. So get some extra cash and go and invest in some more assets. So that's one of the ways you can benefit. And the other way, you can do 2x, 3x more projects, right? You can focus on what you do best. You can focus on real estate and let the DeFi and just basically the world take care of the fundraise for you. If you're doing a great job making people money, there will be investors that will come.
Yeah, and now coming back to those DeFi and those consumers who make the DeFi happen, you just mentioned this a few minutes ago, and for my listeners, this is not just like Bitcoin or Ethereum. You cannot just there in Bitcoin and Ethereum, there's if you have to register for KYC to buy your Bitcoin on this exchange or that exchange, you can always find another way to buy it without it. So a lot of my listeners
Hmm.
aren't used to this regulation that comes with tokenizing assets. Can you talk
Yeah.
about that, where you see that regulation going, and where you fall on the spectrum ideologically?
So because I come from a traditional financial, capital markets, I do feel that a lot of people need those protections. They need those protections when they invest, right? Crypto is used for various things in the world. There are many countries where there's like huge inflation going on, so crypto was very helpful. Let's say in Venezuela as a storage of value. So not a lot of people just trade. Let's say a lot of people don't trade crypto. They just, keep their money, hodl, as they say. And, that's a great way to kind of keep value in crypto. But in terms of portfolio wise, you need to differentiate. Everybody knows differentiation is key. So crypto is considered to be a highly risky and volatile asset, and real estate is a highly stable asset. I believe tokenized real estate is gonna probably be a little bit more volatile, but not by a lot. Probably, by a certain number of percentage points, just because the underlying asset is still very stable. Why is it stable, by the way? Why is it growing? Well, I think it has to do with the growth of population, for example, which is stable and growing. People need somewhere to live, and these people also shop. And maybe now they don't work from an office, but a lot of people still do and will do when they get tired of sitting at home. I do think that the offices will have a certain level of comeback, not the same way, but there will be some increase. So at the end of the day, there will be a thin line between kind of the DeFi industry, where everything happens without KYC, AML, and so on and so forth, like it does in crypto. And in certain instances, I support that, because people just need to make transactions happen in many ways. I that's how I started in Bitcoin, by the way. And in 2017, 2018, I had a business, I had a marketing company, I had a lot of employees overseas, and it's so difficult to send money via bank or PayPal. It just eats so much of your profit. So I was just like, wow, I can pay them in Bitcoin. So I just bought a bunch of Bitcoin, and I paid them all. That's why I'm not rich yet. So because I was using, I wasn't. So yeah, I bought a lot of Bitcoin. Every month I would send like $10,000 or something like that or more to my employees overseas. So I would just buy Bitcoin and send it to them. So, basically that's why people need it. But in real estate, in investments, absolutely you need some regulation, because as you might have heard in 2017, 2018, what happened in the initial coin offerings, ICOs. There was a lot of misuse of this technology and on this asset class for companies that either scammed people or didn't know what they were doing, right? So we need to definitely protect investors.
Absolutely. I think there's really a tension there, because if I want to do a crowdsourced real estate investment through Fundrise, I don't get to
Yeah.
choose the sizing of my debt on my equity. Whereas
Yeah.
with there's more utility with tokenization.
Of
I
course.
get to choose my debt sizing.
Hmm.
Same thing. Another thing that I've seen is with these exchanges. Let's take FTX. I could
Yeah.
go on FTX with a VPN. Someone could, and they can say, "Oh, I can lend out a stable coin and get 30% yield on that." If you're in the United States, you go on FTX US, and there's a thing that pops up that says you need $10 million net worth to be eligible to lend to get the 30% stablecoin yield. So I see that these regulations are designed to protect the little guy, but when the little guy sees a little box that pops up that says, "Oh, you can't realize this yield on stablecoin dollars unless you have a $10 million net worth," while all the people outside of the United States can access
Yeah.
this yield on stablecoins that's so much higher than the risk-free rate, so much higher than your bank account. It becomes doubtful that for them that
Yeah.
this is actually helping them.
It's asymmetric for sure because of this compliance and regulation. The United States government is definitely much more protective of the citizens, right? But on the other hand, I agree. We need to There needs to be some sort of leveling of the playing field. And by the way, these yields are not going to last that long, right? So you can speculate how long the DeFi market is going to last, whether it's a bubble, whether it's not. You see this thing happening with NFTs as well. At the end of the day, it's all the yields are as high as the popularity, right? So as soon as people are getting these high yields, the popularity grows. At a certain point, there will be a new product, so that the yields are going to go down. It's basically it's the nature of the industry.
Right. It's speculative, and by its nature, it's inflationary,
Exactly.
which is the opposite of Bitcoin. So, well, not the opposite. I mean, it's very little inflating, more like gold. But I guess, what do you think? Can real estate be decentralized? How would you frame that? Let's wrap up with that.
So there are difference between decentralized and disintermediated, right? So platforms like SolidBlock are centralized right now, but our plan is by 2022 introduce a level of decentralization or disintermediation for governance, for example. So we don't want to be the body that decides which projects get to go on the platform or not. So we're creating a platform called SolidCoin, where we're gonna allow in a permissioned blockchain way, like proof of assets way, to 20 to 30 large asset managers to actually decide with their wallet which projects they want to back and not, and which projects they don't, right? So if we throw in a project that passes, let's say, early due diligence, and they like the project and they're actually going to underwrite the project or finance the project on the primary stage, we can leave another, let's say, 5 to 10% of the project to the crowd to put their money in after the big guys put their money in, right? We'll let the big guys decide. Do you like it? You like it? Then, it must be a good project, right? So then we'll let the little guys throw the money in. Whether, we'll have one node that's going to be a collective node of everybody, a blockchain node. I know it's a little bit of more advanced information we haven't talked about, but if people are, there are people around here that are getting the blockchain, they'll get what I'm saying.
Yep.
So in that way, we're going to decentralize or disintermediate the governance in terms of which projects get funded. And that, I think, is going to be a major step in the direction of, this decentralized real estate.
I guess
Financing, at
I'm
least.
not following that. So that got out of my league. So what is different
Yeah.
about that compared to just, oh, the project got enough equity so it got funded, or oh, the project didn't get enough equity?
Yeah. All right. Sure. So right now, when the project, we refuse 99% of the projects that come to the platform for various
Oh, you mean
reasons.
that, so the projects I'm viewing on the website are the
Yeah.
1%.
Yeah, exactly.
Got it.
You're seeing the 1%. And so why? Because number one, SolidBlock doesn't have capacity to process all of these projects or even to do due diligence on all these projects.
Got
So
it.
we have some sort of a stringent threshold. Now imagine you have an ecosystem of 20, 30 large hedge funds, investment banks, asset managers. They each have a node. So, or node or several nodes, depending on how much assets they have. Now a project comes in and let's say goes through initial layer of due diligence, again in a decentralized manner. They can decide to use Ernst & Young, Deloitte, one of the big four. Let's say they pass the due diligence, they go into the system and they say, guys, do you want to fund us? Now these 20, 30 nodes, blockchain nodes, will make a decision based on like permission blockchain, meaning proof of stake or proof of asset, as we call it. And they say, I want a piece of that project. How much do
Got
I
it.
want? I want, yeah. So great. So the project, and then we'll always leave a certain amount for the little guys. Like we didn't do that with Aspen Coin. It just got funded so quickly. Elevated returns was actually the issue on the deal. So they got deal funded, and it got it funded really quickly, them and some other broker dealers. But then people were complaining. They came and we got a lot of emails at SolidBlock saying, people wanted a piece of the Aspen Coin. So we're going to leave, 10 to 20% to the people to come and invest, right, in each project. So then at the end of the day, the project will get funded with, SolidBlock is going to just do the technology and, decentralize the decision-making process. Leave it to the community to decide what actually will get funded and what won't.
Got it. That makes a ton of sense.
Mhm.
I love it. What should we talk about that we haven't talked about? What am I missing in this space?
So I guess the only thing that we haven't kind of discussed was, what's there beyond real estate, for example, right? So we are obviously the leader in the space of real estate, but
Hmm.
tokenization is happening also for private equity. It's happening right now for art, music, very, very popular, because
Yeah.
right now people are trying to do that in an unregulated manner. I think it's not going to last personally.
Why do you say that?
Because to me, when things are going out of control, it's reminiscent of a bubble, like what we've
Of the
seen
ICO bubble in
of the
2020.
ICO bubble. Yeah, exactly. So, I feel like I'm in that bubble right now. I go on Clubhouse and there is a huge group with Paris Hilton and other celebs talking about, how they bought sneakers for $12,000, donated the proceeds, I don't know what, which is great. And then a guy comes in and says, we're gonna burn the most expensive Da Vinci painting and we're gonna film it, and then we're gonna, you know, NFT that video. And who are we? Who is anybody to decide what's art and what's not? And I'm like, right.
So basically, you're saying things are getting out of control. This is not going to be sustainable
Yeah,
when
yeah,
Da Vinci
exactly.
paintings are
Hyping
being
up.
burned.
I know, it's basically, yeah, you're hyping up the aspect that's great. You're burning historical artifacts to create hype. That's one for me. It's like, all right, so
That's a
let's
sign. That's
let's
a signal for
that's a
you of
sign.
the
It's
top.
a signal,
That's
yeah,
that's
to
a
get out.
trading signal.
Exactly.
Okay. And with tokenized real estate, while it may not have realized the exponential growth of these natively digital assets on the blockchain, you're saying, hey, it's sustainable. We're clipping off these 10% yields while the S&P is at this much riskier rate based on valuation metrics.
Exactly. Like people own real estate since the beginning of time or beginning of people. Maybe they owned caves. I don't know, but yeah, you need either a place to live, or at least, like I said, have a stable asset that you can build upon. Now we're making it available. It's definitely here to stay.
Yeah,
I'm saying, you mentioned people should have exposure to crypto. None of this, by the way, is investment advice,
of
just in
course.
case, disclaimer. But it's not a bad idea to just kind of buy a little bit of Bitcoin. Just, it's a historical moment, right? Whether you believe in it or not, like you're not gonna have a huge risk, by owning like a small piece, like $1,000, or even $500 in Bitcoin. But it's just interesting, like kind of buying, I don't know, a crystal vase or something in a shop.
Come
But
on. I think I was listening to
yeah,
something you said about your background. You believe in it a little bit more than that, right?
I bought, like I told you, I bought a bunch of like over the years. I bought so much Bitcoin, like I
Right.
spent it. But obviously I have Bitcoin, I have Ethereum, I have other types of coins. No, absolutely I do. I'm just saying, people either believe in it or not, and it's their personal risk appetite, right? There's some people that are extremely risk averse, so they'll, let's say, only buy real estate and they'll only buy mutual funds, and that's their business, right? That's what I'm saying. Like if you're extremely risk averse, just for the hell of it, like, buy a little bit of
Right,
Bitcoin.
the
Like,
get
why
off
not?
zero thing, the pomp
Yeah,
slogan.
exactly.
But I
Yeah.
mean, you said, I was listening to this and it was really fascinating. People could probably find it on YouTube if they search you on there. But you said you grew up in Russia, one of the most
Uh-huh.
centralized
Yeah.
places. If you could talk a little bit about your background and how that's influenced the evolution and arc of how you see where history is going with finance.
Oh, for sure. Yeah. So I was born in 1983 in the USSR, and my first memory was kind of standing in a line for butter when I was 4 years old,
Wow.
and that's yeah. So we weren't extremely poor and we weren't extremely hungry, but there was just shortage of basic things. So, and then I remember going to buy ice cream, and it was fascinating how at 7 years old, they used to just send us around by ourselves with like money in our hands. Right. And then I remember like this crazy money that's like basically useless paper, because one day it had 5 zeros, next day it had 7 zeros, and then just kind of spinning out of
Really?
control.
What
Yeah,
was that
spinning out of
like?
yeah, it was just basically like these colored papers, like Monopoly paper, and they just kept issuing and
And how old were
printing
you?
more. I was 7 years old. That was right before the Soviet Union basically broke up, or maybe it was right after, when the money was just, yeah, I think it probably was right after. It was like major deflation, because people still were learning about the new economy, because it was super centralized, and there was this 5-year plan that the government would put together, and then everybody was kind of be working towards achieving that plan. And then the Soviet Union was dissolved, and it was like a country of Ukraine, a new country with a new money, but still no concept of economy. And by the way, there was a huge bubble back then. I remember everybody invested in this like state owned or newly privatized enterprise, and it was a huge pyramid. Like people lost all their money,
Wow.
like
So
kind
you
of
said people
our own.
didn't even really
Yeah.
understand the economy or what to do. Were
Yes.
they just like they didn't understand free market principles or to start a business?
Yeah.
Like were people walking around just not knowing what to do with themselves? I mean, that's what you sound like saying.
Yeah, people didn't understand the principle of investing, but people did hear about businesses. Like my father, like he dropped out of his PhD in physics, just started making like cotton, what do you call it, cotton candy for children in the park, like
Hmm.
things like that. And then I remember they had these go-karts, and I would, as a kid, I would also ride the go-karts. Like they started doing businesses, and then he kind of grew up and like into a successful business person, and was a manager of a big plant for, like, I remember, until the government changed again. And then like people they just throw people out, because it's still reminiscent of the Soviet Union over there.
Right. There's still
But
remnants of that system.
yeah, exactly. But it was just like my early education into money, like how useless it was. And then I'm thinking, wow, there's got to be something different. And then I go to the US when I was 16, and I was like, well, this is a completely different system. It's all capitalistic. And then there's this dream that says, the American dream, that you can be whatever you want, you can have as much money as you want, and you should be investing. And so it was super, super interesting for me, this dissonance, or at least like dichotomy of things. Yeah.
What brought you to the US from the Ukraine?
I was an exchange student in the U.S., kind of like in the American Pie, the Ukrainian exchange student that
Okay.
comes over and very clueless, doesn't know what's happening. Not
Then
exactly like it though, not exactly.
yeah, and then now you're in Israel. What got you back to the startup nation from the United States? It sounds like you're more sold on the ethos in Israel even more than the US now.
Oh, for sure, for sure. Well, the weather is better, so at least
You
that.
think
But
it's kind of like California but hotter? I don't know. What do you think?
yeah. Well, yeah, it depends. I guess you have, California, even you have like Northern California, and you have like the Silicon Valley and the Silicon Beach. So there's like two different
Mm-hmm.
ecosystems. In Israel, it's very different. You have like huge differences. You have the mountains, you have the snow, you have the Red Sea, you have the Dead Sea, you have the Mediterranean Sea. So in like a small area, and you have the desert, so you have savannas, like you just basically have everything and like concentrated in a small area. But I love the in Israel there. I came here because it's like a historical, motherland, right? The Jewish nation, in a way, although it's super diverse and a melting
Are
pot.
you
And there's
Jewish?
also, yeah,
Okay.
I converted to Judaism. Actually, I have like a Jewish father and then a Jewish mother, so I had to convert. But I love how it's actually very diverse. Israel. You have 20% Muslims. You have also 20%, all kinds of immigrants and Christians, and
Mm-hmm.
so yeah, and around I think 60% Jews or so. So it's actually pretty diverse, and the Jews themselves are come in all colors and shapes, right? There's Ethiopian Jews that are coming now. I think there's a last of them coming over to Israel, which is pretty cool. So yeah, and you have black Hebrews, and it's really fun actually to live in Israel.
So that's what brought you, or the startup culture of Israel brought?
It
How'd you get
wasn't
to
the
Israel?
startup
I mean,
culture.
the U.S. was
Yeah.
probably an upgrade from the remnants of the USSR, and then you're in the United States. I mean, walk me
Yeah.
through from United States to now you're in Israel.
Yeah, so in you have this concept in Israel. They're trying to like advertise the country to you if you're Jewish. Like they want to bring you over for free. They show you how amazing it is, and then how amazing it is to come and live there. So that I did that. I came over a few times, and I did even a program in the army here, and that was amazing
What'd you
actually
do in
to
the army?
see. It was a volunteer program, but they basically walk you through what an average Israeli goes through, like basic training. With you run around with some M16s and the guns, and
Okay.
you sit in a tank, and then you crawl through the sand. Your elbows are bleeding, and it's obviously don't go to war, but you're having fun, and they yell at you like they do, and it's fun, right, in a masochistic kind of way. So but you get the sense of camaraderie, and that's actually one of the aspects that helped build the startup nation. A lot of people, there are a lot of technologies that came out of the army, and a lot of people who went together and served, not the way we did in a fake way, but in a real way. It brings people together and makes them work really well together. So then they go and they create a startup together, and that's a really strong startup.
And what was it for you, though? I mean, you said you converted, but what was it that actually brought
Yeah.
you to Israel from the United States? Or did you come from the Ukraine? I mean, you're just an exchange student
No,
in the United
yeah.
States, or
I
you worked in the
came.
United States too?
I worked a little bit. I worked on Wall Street
Right, you
for a
said
broker
that.
dealer. Yeah. And I finished my master's and I worked for a year. And then I moved to Israel because actually my parents moved there a year before me. That might have been one of the factors, but in general, I just was in love with the country. Like every time I came, I felt at home, and people were so nice. The weather was great, and so I wanted to give it a try. So I moved a year after college.
Man, that's fantastic. We were talking before the show. I am trying to come to Israel, but you said first you got to get vaccinated, and you probably should wait 6 months because you haven't quite figured out the green zone yet.
Yeah, I mean, if you can come, obviously do come as early as you can, but I don't expect the country to open up yet in the
And it's
next
worth
six
the
months or
wait.
so. Oh, absolutely. I mean, as soon as you can come over, you should come over. It's an amazing place. Like, obviously we'll take you around when you're here. So you'll have your personal tour guide.
Thank you. I really appreciate that. Yael, you mentioned your podcast. Where can people find you online?
So anywhere, like if you Google Yael Tamar, you'll find me on LinkedIn, Facebook, Instagram. I have a podcast on Spotify and Apple Podcasts, which is called Block Solid, and it's talking about real estate and technology. So yeah, definitely check it out. Check out our marketplace on marketplace.solidblock.co. Yeah, and there's and just be happy to talk to anybody, and who wants to learn more. And I have a
Thanks, Yael.
course also, by the way,
Oh,
a
you have a
course if you
course.
want to learn. Yeah, if you want to learn about tokenization A to Z, really all about compliance, all about real estate models, everything. I have a 10-hour course. It's also, you can find info on our website or on different course websites called Tokenization 101.
Perfect. I love it. Yael, we
Yeah.
learned so much. We're so grateful for your time. Thanks for coming on.
Thanks, Matt. Have a good day.